Insurance agent, and I invest in real estate. In the many conversations we have with real estate investors, I wanted to create this video regarding our top 5 suggestions for insuring investment in real estate. First is having the right policy type for your assets, for your home. What I mean by that is a lot of times a home is not occupied by the owner, but is insured on a homeowner's policy. So that happens, for example, when an owner moves out of the house, buys a second home, but keeps the old home as a rental property. However, never changes the insurance from an owner-occupied policy to a non-owner-occupied policy. And it can also happen in a seller financing situation. The house gets sold in seller financing, the new owner may just add his or her name to the insurance to not tip anyone else off there was a sale, but never change the policy from an owner-occupied policy to a non-owner-occupied policy. In either case, for either reason, that now may be an unenforceable insurance policy. Heaven forbid something were to happen. Number 2, who is the named insured? If the home is not owned by a person anymore, let's say it's been put into an LLC, we want to make sure that LLC is the named insured on the insurance policy. So the appropriate owner that has insurable interest is the person or entity that is covered if something were to happen. 3 is don't skip on liability insurance. This is the most affordable part of the policy that has sometimes the largest claim payout. For example, sometimes the double or triple liability coverage is only a couple dollars a month. Okay, number 4, making sure the home, the actual building, is covered at replacement cost. And we are calculating its replacement cost to make sure there's sufficient coverage. Sometimes when that doesn't happen, an insurance agent will base the coverage off of an appraisal or maybe what the loan amount's going to be. And sometimes that's just fine, but also sometimes that may not be enough, or that could be too much coverage and then you're overpaying. We want the insurance agent to calculate, based on all the home characteristics, how much it costs to build that house, and that's what we base the insurance coverage for the home or the building off of. And finally, experience matters when it comes to non-owner occupied properties, whether it be a single family residence, a duplex, or an apartment complex with 100+ units. Having someone that has experience either working with investors or being an investor is really critical. So for example, this home is a business. We want to make sure that if it loses money due to a covered loss, we can make up for that lost income. If it burns down and takes 12 months to rebuild, it's not generating income. I want to make sure I have coverage for that lost income. Secondly, is let's say this building here has a loss, or this part of the home or building has a loss. But to rebuild this part, we have to bring it up to code. Maybe it has outdated electrical or outdated plumbing. To bring the electrical and plumbing in this part up to code, we probably have to dig into the good side that wasn't affected by the claim to do it over there. Well, without the appropriate endorsement, upgrading the good side wouldn't be covered. You have to pay for that out of pocket. The affected side by the claim would be. So hopefully that helps. At least work with your agent to ask the right questions, and if we can be a resource for you, we'd love to. Again, thank you. My name is Lance Paulson.